Bitcoin. Why is the price dropping and should you buy the dip? Bitcoin has been attracting attention lately due to its price drop. Today, the BTC price fell to $63,522. Some analysts explain this by saying that Bitcoin is experiencing a decline in activity related to cryptocurrency exchanges. Is the situation critical for Bitcoin? The most significant indicator of this situation is the decreased interest from investors in Bitcoin. Additionally, there is a decline in network usage. Some experts note that this situation is typical for the summer period. People often need cash for vacations, which can lead to the conversion of cryptocurrencies into money. This is a normal practice for the summer months. This situation might appear as a decrease in interest in Bitcoin, but as network activity has also diminished. Many may be in a wait and see mode. Those who bought at high prices are unlikely to sell. The well-known correlation between exchange inflows and market sentiment indicates that since March, Bitcoin has been oscillating within a certain price range, causing some investor fatigue. This could explain the decline in interest. However, crypto investors are still anticipating a rally. Arthur Hayes insists on buy the dip strategy. In the last 24 hours, the leading cryptocurrency has decreased by 2.5, and over the past 2 weeks, by 12. Despite this negative trend, Arthur Hayes, co-founder of BiteMEX, remains optimistic and actively encourages investment, supporting the buy the dip strategy. His confidence is based on an analysis of global economic conditions and central bank policies, which he believes will foster the growth of cryptocurrencies like Bitcoin. Buying Bitcoin on the dip? Hayes' ideas emphasize the aggressive monetary policy of central banks, especially the U.S. Federal Reserve. This policy, including rapid interest rate hikes, the most significant since the 1980s, was introduced in response to rising inflation in the U.S. This increase has significantly impacted the bond market, particularly US Treasury bonds, UST, whose prices have fallen due to rising yields. Japanese banks seeking returns in an environment of near zero domestic interest rates invested heavily in these USTs. However, this strategy became unprofitable when US interest rates rose, leading to substantial paper losses for these banks. This scenario reflects a broader trend among Japanese banks, which may have to continue selling USTs and other foreign bonds in response to new economic realities, driven by US monetary policy. The Fed's tight policy is favorable for Bitcoin. Hayes argues that these events have significant implications for the cryptocurrency market, especially Bitcoin. He notes that measures by central banks to stabilize financial markets, such as the Federal Reserve's decision to provide full support in March 2023 after a series of bank failures, indirectly benefit cryptocurrencies. This intervention caused a sharp rise in Bitcoin prices, strengthening its status as a viable alternative investment during financial instability. Additionally, Hayes points to the details of the FEMA repo mechanism, which the Fed expanded to support liquidity. He explains, "The growth of FEMA repo operations indicates an increase in dollar liquidity in global money markets. You all know what this means for Bitcoin and cryptocurrencies. Hence, I felt it necessary to warn readers about another way of hidden money printing. This mechanism allows central banks to exchange their UST reserves for dollars, increasing the supply of dollars without flooding the bond market and potentially raising yields. Implications for Bitcoin and other cryptocurrencies." Hayes suggests that as central banks, especially the Bank of Japan, might use these mechanisms to manage their UST exposure, the resulting increase in dollar liquidity could drive investors towards cryptocurrencies. This move is seen as a hedge against potential inflation and currency devaluation due to monetary expansion. Hayes vividly describes the impact of these macroeconomic maneuvers on the crypto market. As many started wondering where the next surge of dollar liquidity would come from, The Japanese banking system dropped origami cranes made of neatly folded dollar bills into the laps of crypto investors. This is another pillar of the crypto bull market. The dollar supply must increase to sustain the current messy financial system based on Pax Americana dollars. Hayes emphasizes that despite volatile market conditions, fundamental economic and monetary events create a favorable environment for Bitcoin's growth. His analysis indicates that savvy investors should view the current price drop as a buying opportunity, considering the broader economic backdrop, which he believes will continue to drive interest and investment in cryptocurrencies.